Let's talk about some flow examples and see how they played out. Sometimes before news is made public, you may see an unusual amount of options activity in an otherwise generally low volume stock. Take MoneyGram for example. On the 20th of January, with MoneyGram trading at around $9 a share, a massive influx of call volume was spotted. This volume, as you can see, was well above the recent norms. The unusual call activity continued for the next few weeks, with overall open interest, colored in yellow, increasing in turn. Then, on the 15th of February, it was announced that MoneyGram had agreed to be acquired at $11 a share. We saw similar call activity occur prior to the Del Taco acquisition by Jack in the Box, which took place in December. I'll put a link to a video breakdown of the Del Taco trade in the description box below. The next flow example comes in the form of an earnings trade. Earnings trades are largely viewed as rolls of the dice, but if you can identify unusual flow, coupled with an understanding of the trader's intent, you can set yourself up for a better rate of success in following earnings flow. Take these Harley-Davidson calls for example. We can see ask-side flow coming in the day before earnings. The 38 strike calls, which only had 143 open interest, saw over 2,500 contracts traded in the span of a few seconds. Given the low open interest and the high volume coming in, this is easily identifiable as being a series of call orders being opened up by eager buyers. The earnings call went favorably, with Harley-Davidson posting a surprise profit, beating both the top and bottom line. The calls, which were bought for $80 a contract, went as high as $575. Back to this flow for a second. You may be thinking that the overall dollar amount here is too small to be significant, but that is a common misconception with hunting unusual flow. I'd encourage you to more so consider the nature of what makes any given flow unusual and to focus less on the dollars transacted. Take a look at this Pfizer flow coming in the day before earnings. We see big dollar flow coming in at the ask. However, the trader's intent is very unclear here. There is over 44,000 open interest and not enough volume to even begin to assume that call contracts are being opened. So it is entirely unclear if these are buyers creating positions or buyers closing positions. This is flow that is unclear. And when it's this unclear, you can't reasonably follow it on the heels of a binary event such as an earnings call. Pfizer missed earnings, and given the decrease in open interest, we can come to the conclusion that these traders were likely buying to close their previously held short call positions on Pfizer. Given the current market conditions, being more selective of the flow we take is more important than ever. Happy hunting this week.